You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from optionpit.com.
Welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing in these parts we'd like to call the Options Insider Radio Network. 13 programs on said network, including all of your favorites, like the Option Block, over 400 archived hours of options goodness just in that Option Block show alone. Let me pull up while we're talking here the exact number for all of you out there. But yeah, I believe it's well over 460 archived hours at this point. A lot of options goodness in there. If you got yourself some time on a plane or a train, by all means, swoop on in and download some episodes. Actually, 440, so I was a little bit ahead of myself. 440 archived hours of Option Block goodness. Where can you find all that? Well, of course, theoptionsinsider.com. Click on the Insider Radio Network tab, and bam, you're off to the races. You can have all that 440-hour goodness, plus all the other programs on the network. Of course, you can also find them iTunes, Stitcher, TuneIn, AHA Mobile, pretty much wherever you find your favorite podcast programs, or just grab our mobile app. It's available for pretty much any platform you can think of, including Amazon, including iOS, and including the Google Android tablets. So no shortage of ways for you guys to download this show, take it on the road with you. You made it as easy as you possibly could. And then, of course, for you guys to send us your feedback, your questions, your comments. We love to hear from you guys. All right, and joining me on the old program today, starting off with the man beaming in from the great principality, the archduchy known as Maine, the Rock Lobster himself, Mr. Andrew Giovinazzi. Andrew, welcome back to the Option Block program, sir.
I think it is is it a duchy?
It might very well be the Duchy of Maine. I'm going to start calling it that from now on. It sounds good.
It's the great state of Maine, so, yeah. What the heck?
Where else would you have myriad lobsters but in a duchy? It's the food of the dukes.
Exactly. They don't jump out of the water, though, not as much as I thought they would, but they're there.
So you go. That's what happens when you move all the way to the coast just to get those lobsters jumping in your lap, and then they don't do it. Must be disappointing.
No, they don't. But the horseshoe crabs kind of do, but they don't really.
Those are no fun. I've had my share of I've encountered my share of horseshoe crabs in my day, and I don't need to encounter anymore.
You're a Massachusetts guy, right, or Connecticut guy? So
Connecticut, yes.
Coast.
Well, we've had some horseshoe crabs in our day, but not. I can't say they're not as fun or scintillating. Certainly not as worthy of a duchy as the lobster is.
No, they're not.
I love the places we go to at the start of this show. Speaking of the places we go to, we always make a stop in that great enclave of all things tropical and temperate known as lovely St. Charles, Illinois, where we are joined by Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome to the program. And I know for a fact now that St. Charles exists because I ran into a few girls from it in what other place but the Magic Kingdom. How weird is that?
Well, so first of all, a couple things that need to be said about the geographical comments that have been going on. So technically, you're passing the duchy from the east to the west, from Maine to St. Charles. Second thing, I'm not convinced that they were really from St. Charles, because why would anyone ever leave St. Charles to go anywhere else?
That's true.
I think they must. They're just posers that maybe we kicked out.
They escaped. They got over the wall somehow. Call the local constabulary because someone has snuck out.
There's no wall. No one would ever leave.
To keep people out from this fantastic, paradise.
Oh, out of respect, though, no one comes in unless they're invited.
That's true. That's true.
So with that, so I question if they're really from St. Charles for that reason alone. And with that, it's just a beautiful place. How can you not love it?
Well, now I know that it does indeed exist. It's not a figment of your very active imagination. As we move on into our first segment, the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's lighting up our collective tapes. Most of the major indices in rally ho mode. For those of you playing the home game, we are recording this on Thursday, June 18th. And the S&P up a solid 1% on the day, or a little over 20 handles, closing right around 21.21 on the day. The Dow also up 1%. The NASDAQ saying, the heck with you guys, we're going to do nearly 1.5%, about 1.4% on the day. And VIX cash, after getting all that love, all that vol balloon exploding from all that Greek love earlier in the week, now taking it right on the chin, blowing down, almost breaking through to the end of the day of the 13 handle, hovering right around 13.2, off about 1.3 points, or to quote a percent of a percent, about 9% on the day. It's not as fun doing it when Sebastian isn't here, though, because Andrew, you don't get as riled up about it as he does.
I know. It's just some things I have to leave to him because he gets so darn riled up.
Yeah, it's one of those things you kind of have to just surrender at this point. It's out there. It's happening. It's the vernacular. You can't fight it. It's like a tidal wave. It will just wash you away. So you might as well just enjoy it. That's what I mean. I enjoy just seeing Mark turn apoplectic whenever I say it. So I love that. All right, and the greasy meatball is not here, but Mr. Rock Lobster, what caught your eye in today's myriad explosion of upside activity?
The constant rally on that there might be a Greece deal. So there was a good rumor that they were going to loan Greece $10 billion more to go to December, and they figure by then Cyprus, the Syriza party will lose all their support since all they've done is totally make Greece basically do nothing over the last 6 months while they've been negotiating, and all of a sudden. So it looks like that's the latest gambit, is just get rid of these idiots and try to get a government where they can just move forward. So that was the rumor, and I think that drove VIX down to like 1275 or something today, and it bounced back a little bit when everybody realized, it didn't actually happen. So the market clearly wants to rally on any. Just give it a reason at this point. The risk premium for Greece leaving the euro, apparently there is none. 2 years ago, VIX would have been 22 by now, and right now it's 1324. So you go do that arithmetic.
I believe we call that a collective shrug, or a resounding meh.
It is a resounding meh. No one cares.
Again, those are all technical terms.
They are. They're technical trading terms. This is a technical trading show.
We are not technical. We'll get into that in a little bit, I think, in some of the listener mail. But before we get to that, we have a ways to go before we get there. And Uncle Mike, in addition to the Greek fervor, shall we say, dying down, what else caught your eye out here on the street today, sir?
It was just on fire today with a 1% rally in the S&P. I thought I was going to get to say my trademark thing about never has there ever been a better time to sell, but I can't. I'm not even going to complete it because it's not the truth today, because there have been better times to sell than right now. But we definitely had a lot of excitement in the marketplace today. VIX didn't like what Andrew is saying. We're at the 13 level with the VIX, and it's definitely in resounding meh territory for sure. We're kind of channeling out a little bit on the bond area. So curious to see if we can come back and rally in the bond world, or if we continue to go at the downward pace with which we are. The shocking thing today for me is gold actually moved. Gold hasn't moved in forever. So that was shocking and exciting and fun all at the same time. So bonds down, stocks up, gold up, and what the heck, Apple's up a little bit too.
Yes, that fruit company. We'll get to them. There was some other stuff cooking in the market today. Probably the biggest news, aside from the broad rally on the street, was, of course, the much anticipated IPO of Fitbit. It's funny, this company is IPO, and I believe they were valued as a result of this offering at around $4 billion. Doesn't seem that long ago I was hearing about this company on one of those early stage thing. I think it was on a TechCrunch or one of these, saying, hey, there's this weird company out there. There's going to create this thing, and you put it on when you sleep, and it tracks your sleep, and it also counts your steps during the day. And I said, that sounds kind of cool, interesting. I'll get one of those. But it seemed like a very niche market that they were targeting. And lo and behold, they kicked off what has essentially become this fitness band revolution. Everyone's got one. Nike's got one. You could argue that the Apple Watch is a fitness band now. So everyone's kind of playing in Fitbit's sandbox, the one that they created, in the market, loving them today, despite the fact that there are some challenges for them on the horizon. Not the least of which being the fact that there are some deep-pocketed players coming into that sandbox. They went public. Let's see, what was the actual pricing this morning? Yes, they estimated had a range of about $20 a share, and as the day went on, they rallied to a high of nearly 32, closing today right around 29 in the orders or so, up nearly $10, or a resounding 48.7% rally on the day. And before you guys write in or even ask us, hey, what about the options? We've said it before on the show, there are no options around IPO time. It usually takes at least a few weeks for these things to settle out and for these listings to meet all the qualifications so they can list options, including float. We saw that be a problem with some other names of late. People saying, hey, there's not enough float. How can I get myself protection on some of these names? So we'll wait and see. Hopefully in a couple of weeks we can start talking about Fitbit options. I don't know about you guys, but I'll certainly welcome another name to add to the active fray. And they're a little bit different. They're a hardware manufacturer, so it's not just another LinkedIn or Facebook or all these other. Apple, obviously, a hardware manufacturer too, but aside from them, a lot of pretty much software players out there. So a little bit something different, which is kind of fun. Mr. Rocklops, not really an options name, but was Fitbit the talk of the town in the old pit chat today?
All they did is mention that was going IPO. There's not much. Nobody had an extra grand one way or another on Fitbit. Although somebody did mention that they owned other things that were similar. So, like you said, there's no shortage of competition, but that doesn't seem to bother Apple very much.
Yeah.
People make phones, but they seem to sell a lot of them for some reason.
Well, speaking of Apple, we might as well get to it. Uncle Mike mentioned it earlier in the show, and they had, I think, some numbers come out today. One of the reasons that they were doing so well, let me pull up where they closed today. Yeah, it closed up about 0.5% or so on the day. So actually being a bit of a laggard today compared to the broad street. But the number that jumped out at me is they're making money, decent money on the watch, not so much on the watch itself, but on the bands. They're rolling in money on the bands. Reuters reporting that nearly 22% of Apple Watch buyers purchase one or more spare bands, and Apple, they don't sell those accessories cheaply. They sell them pretty dearly, so they're rolling in it. At least on the band sales, they've sold about 2.8 million watches since mid-June. So factor in a fair number of band sales, and the bands providing a nice little extra boost there. I mean, I saw some of the pricing of some of those things, and they're pretty aggressive. So if they're selling that many bands, they're probably doing all right. They're in the band business. The watch is an added bonus. Uncle Mike, what do you think about that? And Apple just moving yet another high-priced accessory and doing pretty well at it. They seem to be the only ones who can really crack this get the accessories going as well kind of market and sell them for full retail price in your own retail store and somehow make a lot of money doing it.
With that, Apple is something where it's cool. Even if the Android is in theory a better phone and a better system than the iPhone, or if even if something else comes out, if in theory it is better, Apple can outmarket it. It's kind of like the same thing as Portillo's and McDonald's. Portillo's is 10 times the better hamburger than McDonald's is. Anyone from Chicago will tell you that. However, McDonald's can sell the hamburger 10 times better than, well, quite anybody selling anything on earth, quite honestly. So I think that with Apple, they've just established the coolness factor in everything that they touch and everything with which they do, that they can even make millions of dollars selling watch bands.
Yeah, so that's one of the upsides, one of the many upsides of sitting on billions of dollars in cash, that you can market pretty much anything you want. They could do the proverbial selling ice to the Eskimos and probably do a pretty good job at it, because they could pump billions of dollars into that process. Other names lighting it up today. Some other tech-heavy names having some activity today, including one we don't talk about a lot on the show, but it does move fairly well, particularly right now around earnings time. This is, of course, Oracle selling off pretty hard today on the old street, selling off nearly 5% or a little over two handles, closing right around 42, and the orders out there. This one lighting it up from an options perspective. This name does about 23,000 contracts a day, doing over 10x that, doing 270,000 contracts today. And despite the fact that the underlying direction was pretty one-sided, it actually bounced off the lows. It got as low as 40, nearly 41, about 40.97 or so today, and it actually opened lower. So it's kind of has had a little bit of resurgence toward the end here, but still not a great day for Oracle, except from a volume perspective. And yet, despite that one-sided nature of the paper, the options flow was actually fairly evenly distributed, about 1-to-1 calls to puts. So breaking down roughly in the middle there, not perhaps as bearish as you might assume, even though the net deltas on the day were still a little bit bearish. So Oracle, not a name we typically talk about a lot, but perhaps if it's going to be a mover and a shaker going forward, at least from an options and a volatility perspective, perhaps we'll add it to the mix. Yeah, they reported a miss on both their top and bottom lines in their fiscal fourth quarter. Sales fell more than 5% from last year. Of course, like everyone and their mother this time of year, they're blaming the strong dollar, which, that's kind of excuse du jour. We've heard that before. And of course, also the transition to the cloud, which is interesting. Not one we hear as much. Not as unique as SIBO blaming the term structure of VIX futures for their poor performance, but still an interesting one nonetheless. So that's what's catching our eye out there on the old street today. We'll keep an eye on Fitbit. Hopefully that one will get options listed in the next couple of weeks, and we'll start diving into those as well. In the meantime, we're going to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Welcome to the Odd Block. This is indeed the portion of the program where we break down what was catching our eye from an options perspective. And sometimes it's a little bit weird. Sometimes it's a little bit wild. Sometimes it's a little bit just wondrous. Or sometimes you just scratch your head and say, what the heck are these guys up to? We got a little bit of a smattering going on today. It seems like rolls and adjustments are the order of the day today here in the Odd Block. Going to kick things off with Williams Companies, ticker symbol WMB, closing today $48.97, up nearly half a buck or nearly 1% on the day. This is the name that does about 16,000 contracts a day, doing about 26,000 or so today. So a fairly robust day from a volume level, and pretty much all of that, or not all of that, but the lion's share of it coming in this pretty sizable 1x2 up here in the Jan 2016 expiration cycle. In particular, it was the Jan 2016 4750 1x2 going up for the 423 on the 2016 calls, the 47 calls, and 274 on the 50 calls, the half calls out there. And going up, like I said, 5,000 by 10,000 marked two blocks on the Amex, marked as spread. And it looks like it's kind of continuing a little bit of a 1x2 out here. And when we pull up the strike out here, which of course is a little bit farther down, so of course I have to scroll. And we're outside the studio, so my computer is not playing along with me. There we go. Now I can get to January. That's a little bit easier. You'll see, listeners, as you play along yourself with the home game and check out the expiration cycle here for Jan 2016 and WMB, that you will see there is some size open interest here to the tune of about 25,000 open on the 47s and a whopping 86,000 open on the 50s. And you're looking at the stock, like I said, it was hovering right around the 49 range or so. We could have our friend here perhaps getting a wee bit nervous about having some short legs on to the tune of too short on the 50 strike, and so he's saying, hey, maybe I should perhaps start unwinding this. If this is indeed him, and it looks like the open interest lines up, so it could be at least 20,000 by 80,000 open on this strike. If he's doing it on some other funky ratios, see how he's closing it out different ratio than he opened it. But either way, there could be some more to go here on this strike. Mr. Rock Lobster, how do you lean here? I think this is open in paper. I think this is our friend saying, yeah, we're kind of flirting a little bit too close to the fire for my taste, so I'm going to start unwinding my 1x2. We know when we start getting close to that short 2 strike, people get a little bit nervous. You think he's fallen into that camp?
I think he is, because it's kind of like a credit on, a credit off. And I should have checked my, because I could swear I remember seeing this trade go up for a credit earlier, about 2 months ago, and I'm just looking for it again right now. But yeah, I think they got an awful lot of it. Once you have those spreads and you got a long time to go, it's a little touchy if you, if you let them go a little too far, and that's that's Feb 47. I'm just looking at on how they're moving out on them.
Yeah, back on June 5th, we talked about a size overwriter out there on the no 52 halves. He was dumping about 14,000 of those. That's some of the more recent paper we talked about. I'm trying to pull up, see if we actually did a 1x2 out here recently as well.
Yeah, I couldn't see that. There's been a lot of it, and so far all the paper in here has been pretty good. Mostly just going, they're betting on the bounce in all of these, oil service providers and energy companies and stuff like that. So a lot of the guys betting on girls betting on the bounce have done, okay. But I don't think we profiled this other side this year, from what I can tell. So. But it sort of has all the smell of unwinding, and if somebody's unwinding a position like this, they're thinking they go higher. So credit on, credit off, and you're probably a happy person.
Yeah,
so.
There are worse ways to do it. By the way, what is the smell of unwinding? Is that similar to new car smell?
That is, the smell of unwinding is a pleasant smell.
Yeah,
like,
in this case, it definitely is.
Chardonnay instead of Old Style tonight. That's the smell of unwinding.
Yeah, and you get paid to put it on and paid to take it off. There are worse outcomes. Certainly, I think we've all been there.
I don't know what they drink in St. Charles on a big day, but I'm sure Mr. Tusa has a favorite smell of victory beverage, smell of the unwind beverage for himself.
He just brings whatever the designated apple cola was at the time, and that's what he drinks out there.
Apple Kool-Aid, thank you. Apple Kool-Aid.
That was
Come
close.
on now.
That was close.
So now I need to find something else.
Yeah, you're out of that. You're not drinking that as much anymore, so you must have a big opening in your beverage repertoire, sir.
How about this? Some Chicago Blackhawk Cola. There we go.
There you go. My little guy wore his Blackhawks jersey to the parks the day after they won, and of course he got a lot of comments on it. So Blackhawk fans are far and wide, even down here in sunny Florida. As we move on to our next name/victim, another one we've kind of been keeping our eye on of late. They usually are relatively frequent offenders out here in the unusual activity category. This is, of course, Toll Brothers Inc., ticker symbol TOL, or Toll. They're not the fun Toll House cookies with the keeper L's. No. They're a property development company, nowhere near as fun as making delicious cookies. And this is the name that does about 3,400 contracts a day, doing about 8,000 and change today. So a fairly robust day from an options perspective out here in good old Toll Brothers. And let's pull up what happened in the underlying as well. Kind of unched on the day, up about 20 cents or so. So not a huge day from an underlying perspective, but nonetheless a big day from an options perspective. And what we saw out here was interesting roll out here. In particular, we saw the June SEP 38 call spread going up when we profiled it 4,000 times here in good old Toll Brothers. So a total of about 8,000 contracts, and that's pretty much the total volume on the day for this name. So it pretty much all went up in one big spread. Went up for $1.35 here. Looks like our friend here is taking off a bit of an overwrite and then turning around and then just writing it again here, looking at this these strikes, let's see the exact open interest on the Junes. The Junes went up against 6,000 contracts open, so clearly there's some open interest there, whereas on the SEPs, a fair amount actually, 3,500, but still not as much as the buying going up today, about 4,000 contracts. So Mr. Rock Lobster, how you feeling on this this call roll? I think we're rolling an overwrite, or what's your opinion here on what our friend is up to in the land known as Toll Brothers?
This is you're not going to cross my line of death trade. So they had sold 38s, they bought them back, and now they're, probably a long stockholder and saying, nope, we are not going past 39.30 by the expiration date. So very much of a no. You are not getting here by September. No way, no how. And as far as toll goes, it seems like it's kind of topped out around $39 or something. Couldn't quite get over that this year, and that's what this call seller is looking for. There's a little bit of yield on this, not awful till September, but just more of the market, as Tusa almost said today, near all-time highs. You expect to see some call sellers coming out, or at least rolling, and one of the reasons is we haven't been able to break out of this new high. We just kind of get here and then we stall. So I was not surprised to see a trade, something like this, go up.
Yeah, it's not a bad roll. Like I said, $1.35 on a $37 stock. We've seen worse. What's interesting though is that he did keep that same strike. You think if he's so keen to roll away from the 38s in June, he would buy himself a little bit more wiggle room on the upside, but apparently not. He's just concerned more about about maybe a little aberrant pop here in the June timeframe. But he thinks by SEP, clearly 38 is going to be the place to be, and so he's not concerned. He's not doing the old up and out. He's just doing the out, which is a little bit unusual in and of itself. Looking at the chart here, you're right. It has flirted with higher levels back in April. It was just touching with 40, just a hair under it. So it has proven that it can get a little bit higher, but certainly it's not trading 50 or anything crazy like that. So you can see why his concerns may not be too unwarranted in the longer term, but still he's concerned enough to get the heck out of Dodge in June and then just reestablish on the same strike a few months later. So file that in the weird one, listeners. Maybe what's the scenario where if you were going to roll your short calls, when would you roll up and out versus when would you keep it on the same strike? Because there's arguments to be made for both. Maybe in this one I might argue for perhaps a little bit higher, but our friend obviously wants that yield, and he's willing to play a little close to the fire to do it. As we move on, keeping that roll theme alive here into our final name. No, it's not FIFA. No, we're not talking about corruption in soccer. It's IFA, the iShares MSCI EAFE Index Fund ETF, ticker symbol IFA, EFA, closing today $66.22, up about 60 cents, or nearly 1% on the day. It's the name that does about 60,000 contracts a day. So one of the more robust visitors to our odd block segment. It's not the 300 contract cheapy biotech names we usually talk about. And doing well over that today, doing 310,000 contracts, and most of it, the lion's share, going up in this pretty sizable, as Larry David would say, pretty sizable put roll out here. In particular, what caught our eyes, listener, was the SEP DEES 48 put spread going up for 22 cents paper, buying DEES, selling SEP. And when we started profiling it, 67,000 times on the DEES versus 56,000 times on the SEP. As the day went on, that was pretty much, I think, about the total, about 56,000 total on the SEP. Yeah, so that was pretty much about the total of that put spread, which is pretty sizable in and of itself. That's against 64,000 contracts open here on the SEP 48 strike. And in terms of the DEES, we're talking 27 contracts open. So a little bit open in paper on that DEES 48 strike of the puts, with 67,861 total going up on the day. So kind of a similar story here, Mr. Rock Lobster. Our friend liking the level, just not so much liking the time frame he's got going here. And so he's deciding to roll it on out to the Dees to keep that, what you can call fairly catastrophic protection alive. I mean, this name trading today, 66 and a quarter. He's rolling on the 48 strike. Again, another one where you might want to scratch your head and say, yeah, I don't know. Maybe I would take that opportunity if I am going to roll from SEP all the way out to Dees, and he's rolling SEP already, which is weird. He's rolling SEP all the way out to Dees. You might take the opportunity to tighten that up a little bit, get a little bit more relevant protection for your dollar. But hey, that's just me. Call me crazy. I'm just the host of the Odd Block. I'm not a victim of it here on the show. What's your take here, Mr. Rock Lobster, and our friend not only rolling early, but doing the same thing, keeping the same strike, same level, not really tightening things up at all?
The biggest problem I have is, like, even when things look really awful this year, and, the lows are like 58 for the EFA. And they're going quite a ways down there.
Yeah, he's beyond catastrophe at this point. He's 10 handles south of that.
I mean, the only thing I can think of is this is a roll for, let's say, a Black Swan fund, something like that, where, they buy this junk, and, if the market cracks up, they have some Vega, and then they, make a sale of the options. That's the only thing I can think of for this particular trade. Just a real, I figure there's got to be some kind of long against it, because they're going to be waiting a long time to make any money on me.
Yeah, this one, since we are talking rolls, I'm going to role play a little bit, and I'm having a hard time coming up with a roll that justifies this trade here today. It's clearly something making him decide to roll out of SEP now, which is the first kind of questionable move. Why is he now rolling his SEP? And if he is so motivated to roll his SEP now, many months from expiration, and he's taking advantage of maybe a little bit of a rally today to get a little bit of a cheaper price to adjust and roll, why not take advantage of that to get a little bit tighter? Why do you keep this? Why are you so compelled to roll the SEP Dees 48 puts? It just doesn't make a lot of sense.
The only thing I would say on this is that, because they do have some fun clients, they want to keep their protection 6 months out, and their SEPs are on their way to becoming irrelevant, and they could get at least something to cheapen the roll by moving to Dees. So you're right at we're in the middle of June. The SEP, as far as from a Vega point of view, is not really giving them the relevance, so they go out to December. So I think that's why the timing is not uncommon on a quarterly basis. So that's why they move up a little tighter, with the EFA all, a heck of a lot higher than where it was. I cannot answer that, at least, snuggling it up there to maybe the 55s or something like that. But I guess they're just looking for, like I said, it looks like Black Swan protection. And they don't want to change it.
Yeah, at least give me a handle. Give me a strike. I mean, they lifted the offer. They paid 31 cents on the 48s. You could argue you could get some 49s at least for around that price. Maybe you try. I don't know. Just do a little something to make it a little bit more advantageous for you. This is definitely a head scratcher. Listeners, maybe you guys out there have some interesting ideas as to why you would go to all this trouble and then just keep your same level. I mean, the SEPs are irrelevant. The Dees 48s, not that far from irrelevance themselves. You're rolling from one irrelevant position to another, and you're spending some decent amount of money to do it. If you're going to spend some money, spend a little more and get something of actual relevance. Maybe that's just me. Maybe I'm a crazy person, but hey, my crazy has gotten me this far in life, so I'm going to stick with it. Meanwhile, that's going to do it for the crazy portion of the show, a.k.a. the Odd Block. And now, because it's Thursday, it's time for you guys, speaking of crazy, it's time for you guys to take the reins. It's time for us to dive right on into the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, and welcome to the Mail Block. This is indeed the portion of the program where we break down what you guys have on your mind, give you guys a seat at the old All-Star panel. You guys can reach us. No shortage of ways for you guys to make your questions and comments known here on the program. Reach us on the website, of course, theoptionsinsider.com. Leave us a comment on the show notes or shoot us a question on the website feedback form. I know that's the way it seems like the majority of you prefer to reach us, which is fine. We don't mind you guys doing that. Of course, find us via email, questions@theoptionsinsider.com, or a lot of you also like Twitter, twitter.com/options, facebook.com/theoptionsinsider, and we are Options Insider on StockTwit. So there you go. No shortage of ways for you guys to find us, or maybe perhaps you prefer carrier pigeon. We can see if we can arrange that for you as well. As we're getting on into our first question here. This one comes from a listener. It goes by the handle Tennis Great. I like that. That's a good one. And he writes, apparently there's a new name for the show, guys. It's called Longo's Odd Block Show. he writes Longo's Odd Block Show. If technical analysis, this is borrowed a discussion a week or two ago about technical analysis and kind of all of us taking a rather dim view of it. He goes on to write, if technical analysis is not good for options, how then do you get trade ideas? Then he has a second part of his question. He asks, are any of the newsletters that get hawked daily any good? I'm leaning no. Great show, gents. Well, thank you for your love and for your question. I like your name suggestion, Longo's Odd Block. Name the whole show that way. I can go with that. Yeah, and this is kind of our discussion. You may have heard it, listeners, where we kind of all took a dim view of technical analysis, kind of said, we've all tried it in different capacities and had relatively unfavorable experiences with it, Uncle Mike being kind of the lone token exception. He's not really a big technical analysis guy. He just does it more frequently than the rest of us, so he kind of gets lumped in that category. But yeah, listen to our show, and we've outlined many different ways that we get trade ideas. Sometimes the underlying has very little to do with it. We'll we'll talk about the unusual activity we're profiling in a name, and all of a sudden we'll see some great discrepancy going up in some part of the call chain and the volatility skew. Someone is bidding up the call skew and a name X to unwarranted levels, and so you can leg in to verticals at extremely attractive pricing you may otherwise be considered to do. So a lot of those types of discrepancies are what point our directional finders. And you can do a lot of other things aside from technical analysis, of course, fundamental analysis. I know Andrew, the diehard fundamentalist of the bunch, you look at things that are fun and quaint but still have value, like PE and book value and all those other fun things, and find names that you feel are underpriced and then turn around and use options to express that viewpoint, maybe with a stock replacement, or one of my favorites, the long-term leap, swapping it in for the covered call and writing income. We're always profiling income and yield trades here on the program as well. There's a number of different ways you can use options to generate income. You don't really need to have a long-term perspective on the underlying to do that sort of thing. So there's numerous ways we've kind of outlined here on the show that are ways that we find our individual trade ideas, and I'm going to go off the top of my head and think of them. Pretty much none of them we've ever outlined in the show have been involved technical analysis in any way, shape, or form, except for Uncle Mike and once in a while his support and resistance levels. So there's quite a few. I'll let you guys jump in with what your favorites are as well. But pretty much the entirety of this program, all 430 odd episodes now, have involved highlighting a lot of interesting trade ideas that we've seen and analyzing other trades that we've liked or perhaps have not liked and giving our reasons why. And pretty much none of that analysis has ever involved anything on the technical side. So I think we've outlined a lot of it. I'll let you guys jump in with any other specifics you like. Andrew, maybe we'll start with you, because I know you're definitely the most diehard fundamentalist of the bunch here. You're the jihadist amongst us.
The jihadist of fundamentalists. Are all fundamentalists jihadists? I don't know. I don't know. I don't want to get into that. I don't subscribe to any technical analysis newsletters, but I have met people. Okay, I know people who are awesome at it, but they do not write newsletters. I
was thinking, maybe I read it wrong. I was thinking those two questions are kind of separate. I think he's asking about technical analysis on one and then like options newsletters on the others. I'm assuming that he means options newsletters because, of course, we're not going to have a lot of opinions on technical analysis newsletters. I don't think, unless he hasn't listened to the show. So I think those are two separate things. That's how I'm taking them anyway.
But I'd say every ship on the bottom of the ocean had a chart room, is one of my favorite sayings. However, I have known people that are insanely good at it, but I look at that as kind of like pro golf. How many guys are pro golfers in the world that really do well? Like 100. And how many people try to play golf? Millions. That's kind of like technical analysis. There's some guys that are just awesome market timers and have a great feel for what's going on, and I don't know where you get that. And then there's everybody else. So as far as market newsletters, we have a newsletter at Option Pit, and we follow all our results so our readers can follow the results, and it does pretty good. So it's like anything. I think there are some people that do a good job, and then there are other people that don't do that great of a job.
I have some thoughts on this too. So in terms of newsletters, it's one where I've had some bad experiences working with them, but then I've had some good ones too. I'll tell you a couple probably the main story that I have on the bad experience working with one. Back in my brokerage days, many, many years ago, this was not an advisory client. I did not advise him on anything, but this is one to where basically the relationship with which I had is that I made the trade for him. And he called it in, I made the trade. And so he had about $1.4 million, and about $1.3 million was invested in this one newsletter following. And in this newsletter, it was basically just doing vertical call spreads. And so the concept behind it was that it was a very far out of the money vertical call spread. And the people who were doing the newsletter, their thought is that whoever heard of the market going up super fast? So the market goes down, we're doing fine. Market stays the same, we're okay. But market's not going to just shoot up that quickly. So the gentleman made probably between 18 and 20% annually for several years. And this is even before he got to me. He just needed someone to put in his trades for him just because he needed to for execution purposes. And so one day, trade started going against him. And let's just say that one day, the gentleman lost $450,000. And so he was not a very happy person. And ironically, he continued to trade. So with that being said, I don't think he ever got his money back doing that system. And that was many years ago, actually. I think he went into doing other things. We've gone our separate ways since then, although I still do know the man, but nonetheless, it just shows that if you are going to use a newsletter doing higher risk levered type things, you need to be prepared to lose money. Now, the newsletter itself, I don't even know what happened to it. They may have actually been profitable that year. It's very possible. But if you have all your money in a newsletter and you're putting your faith into someone to trade for you and just do these high risk trades to where you're risking everything on an 8% move in the market over 2 months or something like that, you're asking for trouble. And I could tell you some more stories like that too. That's probably the worst one that I know from a newsletter though, but I have several other ones just very similar to that from just things I've seen from my past life in the brokerage side of the business. In terms of getting trade ideas, the way that I do it personally, I would say that I spend probably 90% of my time during the day focusing on just SPY, GLD, or what I've kind of added to the repertoire lately would be TLT and IEF. And just keeping it basic in terms of the underlyings, but just analyzing and constantly looking at every option amongst those underlyings, doing the best possible thing for the best possible opportunity. My thought behind it is that those three underlyings are going to go higher, well, with the exception of TLT in the near term, lower. That's my opinion anyway. Over the long term, they're going to have a direction. So the direction's already been determined. So whether I'm bullish or bearish, it's already been determined. So it's really not part of my daily process. But one thing that I will do on a daily basis is look to see what option trade might be available. And I talk about oftentimes on the strategy block in terms of whether I'm doing a put vertical on SPY on the dip or perhaps doing a horizontal spread on SPY. I spent many hours in years past talking about all the stuff that I did with Apple, and that was just a barrel of fun doing that. But the point is that I like to keep my underlyings limited and focus on the options. I'm not much of a technical analyst. The fact that I actually look at a chart makes me the chief technical analyst of the show, but that's not my specialty. What my specialty is managing risk, laying the money on the line, but knowing that if it goes against me, what's my exit plan? And by sticking to a finite amount of underlyings and by really locking into a specific plan, it's something with which I've been able to have success. And for generating trade ideas, well, market's going to go up over the course of the next 5 years. There's my trade idea right there. How are we going to take advantage of it in the most efficient way? And at that stage, my option geek hat comes on. That's when I go to work, and that's when I have a good old time. So hopefully that answers the questions.
That's another thing to mention is that we talk here on the show, we talk a lot about idea generation, but also we talk about how to express viewpoints on the underlying, whatever the case may be, more efficiently. Like Mike said, using options. That's kind of a lot of what we do here. We were just joking on the Odd Blog about why are people doing things those ways. That seems kind of wasteful and silly, and there are better ways to do these things. So a lot of what we talk about here on the show is also more effective, more efficient use of capital, more effective, more efficient ways to express a viewpoint you may have that would require a lot of money to be tied up and probably not be as efficient and much more expensive to do via the underlying, and you could do it this way using options as well. So that's a lot of what we get into as well, again, which has nothing to do with technical analysis. You've already done your analysis. You've already made your determination of whatever it is on the underlying or on volatility, whatever the case may be. But here's a way you could express it much more effectively. And in terms of the second part of the question, the newsletters, that is a good one. There are a lot of those that are getting hawked. Again, I'm assuming you're talking about options newsletters and not technical analysis newsletters, because if you're looking for the latter, you're writing to the wrong show. But yes, we do look at a lot of these different newsletters. We have our own, of course, every week, the Options Insider newsletter. If you guys aren't subscribed to it, surf on over to the website and do so. We don't hawk any trades there or anything like that, so that's not the game we're in. We do a lot more of rundowns and recaps. If you like the unusual activity we talk about it there. We do educational bits in there. We talk about a lot of different other things that are going on in the options market. So if that sounds interesting to you, by all means, check it out. It goes out every Sunday morning. But again, we're not hawking anything in there. So, and it's free, like everything else that we do. So if you don't like it, you don't have to subscribe to it. It's pretty easy. As in terms of the ones that are paid newsletters, that's where I get a little bit more skeptical. We joke about those a lot here on this program. Hey, this looks like a newsletter trade because the guy's front running his own clients. You get a lot of that in the newsletter business. These guys, I've talked to a lot of these guys. They know that they're going to churn and burn a lot of clients. The re-up rate in that kind of business is south of 10% in most of these. So there's a huge churn and burn. They have to keep converting people on a very aggressive basis. So it's much more on the sales side of the fence than it is on the actual efficacy of the strategy itself. So I'm leery of a lot of those because they're pretty much marketing operations at the end of the day, not so much trading operations. If you find a good one that you like and it works for you, hey, that's fine. I'm not going to turn my nose up at it, but I've seen a lot of them out there, and there are very few that I would consider to be worth paying a lot of money for out there from an options perspective. And as for the great show, I'd say thank you, sir. We got time here for one more. This comes from Anthony S. I don't want to identify him also, and he's got a meaty last name, so I'll keep from butchering it, save him having his name butchered on the air. And he writes, "Hi. Hello, Anthony. This message pertains to futures options. I currently trade futures options on TradeStation's Futures Plus platform. I was hoping someone might be able to recommend a futures options trading platform for a solo trader like myself. I need the ability to enter advanced orders like OCO and OSO based on the underlying price, and I need the ability for profit and loss graphs, neither of which features TradeStation's platform supports right now. The only platform I found that supports what I need is Option City, but the pricing is for institutions, about $2,500 a month. He says that is cost prohibitive for me. Are there any good but affordable platforms out there to trade futures options for a little guy like me? Thanks, Anthony." Well, Anthony, that's an interesting question, and it's something that we are seeing. I'm surprised to see you mentioning the TradeStation platform, because they're one of the ones I know that is investing heavily in making futures options and their offerings on futures options much more robust. OX was another one. A lot of firms have kind of seen their growth plateau on the equity and index options side, and they want to carve out some new frontiers, and they're seeing a lot of potential, a lot of possibility on the futures options side, particularly now that electronification has really spread to that marketplace. You can execute orders almost as seamlessly on a lot of the commodity options as you can on the equity index options side. Anyone who's been playing in that space for a long time knows that wasn't the case not that long ago. I mean, even things like WTI are over half electronically traded now, so you can get some decent electronic execution. That was kind of the missing component for a lot of these products. You still had to call up a pit to get anything decent done. That's not not so much the case anymore. So a lot of firms have seen growth in there, and they're working hard to make their offerings better. That said, you're right. They still do lag behind. One of the reasons we still haven't launched our futures options unusual activity show is because there's still a lot of missing pieces on that side of the fence that are more difficult to find than they are on the equity and index options side of the fence, being data, execution, and the things you're kind of finding, the robustness of the platform. And yeah, I'm familiar with the Option City stuff, and you're right, it isn't priced for you at all. That's definitely aimed at a professional market maker. And I don't know how much size you're trading. Maybe it is worth it for you, but it sounds like in your email that it isn't. So yeah, that's kind of an interesting question. I might have to put that out there to some of the guys I know who are slinging some size futures options. But I have a feeling a lot of them are going to come back with that same answer, which is Options City. So maybe I'll put it out to you guys really quickly. Uncle Mike, I know you do sling a little bit of futures options out there. What would you say is the most cost-effective platform that you've used so far for someone doing small size but looking to grow a bit, like our friend Anthony here?
It's difficult to say in terms of what you're looking for. One thing in the futures option world is something that it's kind of like it's the same concept but a different language. There's exchange fees that are usually put in with commissions on the futures options. You have a lot of different things with which to look at. RCM is what's called an IB, an introducing broker, at a lot of futures firms. So Anthony, if you have any questions on that, give me a call or send me an email. I'll be giving out my phone number at the end of the show. I'll be happy to hook you up with some of our futures guys that can steer you in the right direction for something that's affordable and what can work for you.
There you go, Mr. Anthony. Stay tuned to the end of the show. Uncle Mike will give out his details, and you can reach out to him. Mr. Rock Lobster, I know some of your mentees out there, particularly with the growth in crude and other things, are starting to sling more in the way of futures options, but still $2,500 a month, a little bit prohibitive for them. Do you have any recommendations in that sweet spot for our friend here, Mr. Anthony, as the New Yorkers may pronounce it?
Yeah, Anthony. We have most of our clients use TOS and IB. As of right now for that type of stuff. So that's all I would say. Me, I don't really trade future options. It's just one more thing for me to look at that I don't have any time to look at. You have to kind of pick where you want to go. So, but that's where he could try, as far as I know.
Yeah, that's funny because that's why when he mentioned TOS, that kind of threw me because that's probably the one I would have recommended. That's the one I know I've used the most. I know a lot of people have used the most for futures options. I hear a lot of good things from it. So I would have recommended them, but it sounds like they lack that specific functionality that he needs. I don't sling enough futures options on a regular basis to know all the minute order details of every platform out there. But I'll do some digging for you, Mr. Anthony, see if I can find a suggestion that's a little bit more cost effective than what the folks over at Option City are offering. Meanwhile, that's all the time we have for the mail block. Great questions, keep them coming. And now it's time for us to roll right into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, and welcome to Around the Block. This is indeed the portion of the program we tell you what's moving and shaking on our radar for the rest of the week into the old weekend. We mentioned already some of the earnings that were lighting up the old tape today. We saw, of course, Oracle and others, Rite Aid, coming out this week and have been moving and shaking. As a result, we had our friends out there in the Fed causing a little bit of premium in the marketplace, but that's mostly been squeezed out now. Our friends in the Euro land also having most of that premium seems like squeezed out. So what is left? What's to watch? Uncle Mike, we'll start with you. What are you keeping an eye on for the rest of this week into the weekend?
Well, just to kind of reiterate about what happened this week, too, and going into the weekend, I'll just throw on my football coaching hat in regard to the Fed. Give me the punt team on the field. That's just what it feels like. We continue to punt, and it's just watching nothing happen. And so what was nice about today, we had a little bit of a movement in the marketplace, and just looking at the S&P throughout the entire year, we've gone from 205 to 205 to 212. So we've had a little bit of movement, but I'd like to see more. I'd like to see the market do something. So I'm watching with bated breath just to see some type of movement somewhere, somehow. And I'm hoping to say my trademark thing if we have new all-time highs come next week.
Mr. Rock Lobster, take us home. What are you watching for the rest of this week into the old weekend?
One of my favorite places to be, the NASDAQ, closes at a record high again. So, and I thought that was it. Everybody has the have the scareties on from 2000 when we crossed 5,000, but the earnings profile and dividend streams of the NASDAQ now versus 2000, it's almost like, night and day. And just now they're having yet another summit on the Greece bailout. It's like I'm glad the Europeans really aren't running the world anymore, because they're having a hard time just trying to manage one extra country.
What's an international diplomat or financier to do, sir, without myriad summits? That's their business. That's what they do.
Oh, they are you know what, though? I'm sure they're cushy. They eat at good restaurants.
Delicious gyros, I'm sure. Some
Some
souvlaki, maybe some saganaki. Good stuff. Some ouzo. I can go for those.
Yeah, so anyway, those are the two things. But now I guess vol is going to freeze here for the next couple days while they regroup on this. So, I mean, that's just kind of, I think at this point, the U.S. equity market with VIX at 13 just doesn't care anymore. But we did get that real big markdown in vol today when there was that potential for a deal, and now there's no deal, so we might have a deal Monday. Well, it's just all dopey. That's really
that's probably the best.
Be really ashamed.
That's the best summation of it. It's all very dopey. We're very technical here on the show, as you can see from our earlier discussion on technical analysis. All this chat about gyros and souvlaki and saganaki has me hungry, so we got to wrap this thing up. Hey, I'm supposed to be on vacation here instead of doing all these shows, but I love chiming in with all you guys and chatting some options. But before I go have some saganaki, I should say, let's check in with each of my cohorts here on the old All-Star panel, see what they have cooking that may interest you. Uncle Mike, I believe we have someone waiting in the wings who wants all your contact info, so let him have it, sir.
Real quick, give me a call, 312-212-3531, or send me an email at mtusa@rcmfs.com if you are interested in either trading as a self-directed trader or having a financial advisor, or just have some questions in general.
And Mr. Rock Lobster, same to you, sir. What's cooking in the land of the pit?
We're going to have some big announcements coming up very soon. But
you're finally taking that professional juggling class. Is that what it is? So you're finally taking that professional juggling class. Is that what it is?
Yes, exactly. Actually, sometimes I think that's just what working at Option Pit with Mark is, a professional juggling class.
Yes.
But yes, we have some cool announcements coming out. We are going to have another monthly webinar. People liked them a lot. The boot camp was great. And we'll be announcing another one of those for the fall. And that's about it. Besides just the stuff we do every day.
All right, so surf on over to Option Pit to learn more about all that. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for sending in such great and insightful questions. Keep them coming, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.